Well, I think quite appropriately our next speaker is Alec Macpherson from Octopus Investments, a venture capitalist.
And that probably sums up where Simon has a vision of venture capital. I think Simon makes some really good points, and actually I'm quite looking forward to the panel discussion, because there's a big opportunity in crowd lending or peer-to-peer lending, whatever you like to call it. I've been asked to talk to you about where does a VC, and particularly, where do we get involved? And hopefully I'll be able to run through that. But just a little bit of history for you. I originally founded my own business, which was a business called Catalyst, which we built up and then sold to Octopus. And then we've have taken on more funds under management and are investing into small businesses. And our focus is on the people. What matters to us are great entrepreneurs building great teams, building big businesses. Yes, scale is important, but it's the people we're most interested in rather than any specific sector. So we do look for opportunities across the space, but can we see the team go out, show us the vision, and then execute upon it? And that's the most important thing. Simon talked about relationship and being able to access into, whether it be angels, venture capitalists. One of the things that we do is we have an open office. So every week, Wednesday morning, you can book up a slot and come in and talk to us for half an hour. We don't set any agenda. We say no agenda. Half an hour, talk about whatever you like. And that's the way you can start to build a relationship. You'll see more and more venture capitalists starting to do this. And the question is where is there a gap in the funding area? So I think we've probably had this already with regards to the view that an entrepreneur has of a VC. And the question is why? Because it should be a symbiotic relationship. Actually, we are after a partnership. We want you, as the entrepreneur, to do bloody brilliantly. We want you to build a big business that is highly successful. So why do we have this sort of perception? And it's something that we should probably explore. Let's look at the challenges that I face. Simon mentioned on it previously, which was, there is very little what I would describe as Series A. So that's sort of £1 million to £4 million worth of investment in the UK, and that's absolutely spot on. So as somebody who sits as a venture capitalist with money, able to make investments, that actually is great for us. So the question is, how are you going to differentiate yourself from the crowd? Over the last 3 years, give you an idea, we have had probably 12,000 approaches for funding. We have met around about 700, 750 of those businesses to assess whether we want to provide them with funding. And as one of the most active investors in the UK, we've invested in 30. So that's your challenge. And I agree. There should be more competition in the space we play. Where do we look to make investments? We'll go down to that seed stage. You can walk in with a team that is quite exceptional. We'll invest a few £100,000. We'll also, our sweet spot is that sort of £2 million mark. And we'll go up, and the biggest check we'll write is about £5 million. So that's the space that we sort of play in. And at every level of that, you've got to question, what makes you special? Why are you going to do it? Because we've got another meeting straight after you where every person of those 12,000 plans that we received believes they are the guys that have got a world-beating idea. So start to think through, as the entrepreneur, what is going to make you stand out from the crowd. If we want to back people, start to think of how you're going to have the relationship with us. So do approach us early. It's the reason we have an open office. It's the reason we say, come and talk to us. Build a relationship with us. And that doesn't mean linking me in. It doesn't mean sending me a message from LinkedIn. I'll just ignore it. I'll try not to. But the reality is, my inbox gets pretty full. So at these sorts of events, actually grab us. The team are out talking to everybody. Go and talk to those venture capitalists. Find out who it is. It's a fintech crowd here. Who in the firms looks at the fintech investments? Go and find them. Work out who it is that you know from the portfolio. We all put our portfolios up there. Say, how can I get an introduction to them? And the call needs to be, I've got this great guy. I think you should see him. And the person who makes that call to us is somebody who we know and we trust and we like. Because they won't give us that reference unless they think you're worth the introduction. So think how you're going to make that approach into the VC. Oops. Meeting up, plan it. Do look through, what does the VC, look for? So your fintech entrepreneurs don't approach a biotech fund. They're going to say no. It's bleeding obvious. Focus down on what is important to us. So we say we back people. What we're interested in is how can you execute upon that plan? So walk us through the steps. Say, we're going to be a £25 million turnover business in 3 years' time. How are you actually going to do that? Walk us through those steps. Walk us through the market size. And listen to us. And never, never forget at the end of the meeting to ask, what are the next steps? So many people walk out not asking that question. Lots of VCs, and I hope we're different to that, don't give a huge amount of feedback. Ask for it. Be really upfront. Give me your feedback. What do you think about this? What's different? How can I improve it? We say no an awful lot of the time. So be prepared to learn from it. No, though, doesn't mean no forever. It means no, not today. You're not right for us. And if we've just made a fintech investment, we have investors on the other side, we have to build a portfolio approach. So can we be totally weighted in this particular area? Question mark. Where, because we focus on people, we invest across the space, so no one particular sector. Clearly, somebody in just fintech is going to go down that space. But if you're in payments, and they've just done a payments business, understand that they may not be able to do that transaction today. Doesn't mean they won't do it in the future. It is all about the team. The team for us are the people who have that vision and have the ability to execute. We like having the relationship. So if we've backed a team beforehand, or guys who have been within businesses that we've known, then that's a big tick in the box, and the relationship is all there. What do you want in your team? You want a balance of functional skills. So one of the questions we always get is, if you've got just accountants at the top of the business, actually, where are the sales guys? Where are the marketing guys? We talked about lines of code earlier. Okay, who is actually driving that? So you want that complement of functional skill sets. And then you want the behavioral characteristics and the ambition, the passion, the drive, the integrity that exists and makes interesting businesses. How big can you be? We look for 5 to 10 times our money at a Series A round, so investing a couple of £1 million. If we do a seed deal, we're looking for more than 10 times. So a 200 grand investment, we want to pay us back over £2 million. So also think, if I'm going to go through that sort of escalator that Simon had up there, how much money am I going to take at each time? So bear that in mind when you're making your pitch. As I said, don't forget to ask the question, what are the next steps? The other aspect, we want a relationship, but we only want it for so long. We know we want a divorce. Our investors want a return. So how are you going to provide that return to us? What's that going to be? If we say to you, send us a short deck, don't don't send us 250 pages of detailed investment memorandum. We're simple souls, so outline it. And the most important thing is actually getting yourself in front of your VC so you can have an eye-to-eye conversation. That's what you're after. So think about your deck, address the issues. We, on our website, put up what do we look for from the entrepreneur coming in to talk to us. Go and have a look at it. Use every tool you can and do it. And I would also go and see a few VCs, ideally, who you don't think will fund you as trial runs and get their feedback. If we say, we need to see some customer validation, it basically means that we don't believe your sales forecast. So prove it to us. And we're talking about funding here. The cheapest form of funding you'll ever have is sales. So talking about minimum viable products earlier, get out there, sell it. You won't need to raise as much money if you have cash coming through the door. And then you're having discussions about how do we scale this business and build it quicker rather than how do we go out and raise funds. So sales, absolutely. And the biggest thing is, can this business actually sell to this customer base today or tomorrow? We need help understanding your market. Well, why is it going to gain the traction? Why is it going to be big? When we invested into Calastone, which is a messaging service for the mutual fund market, they were able to point towards one Instanet that had done straight-through processing for the equity markets previously. And secondly, they were able to point towards EMX, which is sold to Euroclear, which had done a portion of that marketplace. And what they were saying is actually we can take market share off of EMX, which is exactly what they've done, and then we can extend it out to the upstream, to the RFAs, the Peter Hargreaves of the world, and Hargreaves Lansdowne, all the way through into settlement. So how are you going to show that actually this is a marketplace where you're going to gain that traction? When we say to you, we want to talk about valuation, that's your cue. That means we're really, really keen. So if you go back to that 12,000 coming down to 30, and you're in front of VCs with regards to valuation conversations, then the whole dynamic of the conversation is changing. Basically the boot's starting to be on your foot. And you'll be able to play nice and cute and say, oh, well, I'm talking to Index. I've got a few other people that I'm going around to meet. What is it that's special about you? Don't take, I would argue, don't take just the money. The money is one thing. In actual fact, financial capital should just be a commodity. What more can you bring to the party to help me develop my business and build a big business? And that's something that's very important to probe. Push your VC, who may be prepared to invest, as to what more they can bring. When we say, sorry, it's not for us, no, it's not today. But that doesn't mean it's not for tomorrow. So stay in touch with us. Keep people abreast. Say, well, when would this business proposition be something that you're interested in? Get that sort of dynamic out. And then hold us to account. Come back, phone us up saying, you said you'd be interested when we're doing this. I'm doing it now. And that's the opportunity to have a secondary conversation. When we say we're excited, we really are. And actually it means we do want a relationship. And yes, we're going to sit head to head and we're going to negotiate of how that investment's going to work. But actually, we want you to be immensely successful. Because if you're very successful and you make a lot of money from the business you're creating, then our investors are going to get a modicum of return. That's all.
I've stopped the timer on you. Okay, I'll take 6 questions for Alex. So let's have one over there. I know there's 2 there.
Hi. I want to make your life a little bit hard and ask you about those 30 finalists, if you want. When ticking all the boxes, do you compromise? Do you say, we won't tick all the boxes, but most of them? And if that's the case, for those 30, what would you compromise on?
There is no perfect deal. There's only a perfect deal in hindsight. When we originally make the investment, we think it's bloody brilliant. So the reality is there is no perfect deal. The way in which we started our business was with a venture partner group, which really an angel group who sit alongside our funds now. And there was one of them who said, yeah, Alex, you know, I really like what we're doing here, but I only want to invest in the good ones. The reality when you make the investment is you always think the good one. There are always flaws. If I look at, I was using the Calistone as the example previously. You know, they for the first 18 months they grew at around about 12% a month. I would argue that over the last 10 months or so, they've stalled because they've only been growing at 6.5. Now that's been whilst we've been looking at the global expansion, so that rather than just UK and a little bit of Europe, we're going Europe and into Asia and Australia. Then you'll see the growth start to come through again. So yeah, there's no perfect business.
So you've talked a lot about it from the entrepreneur's perspective, but how would you answer that entrepreneur's question, which is how do you, as Octopus Ventures, as that business, how do you take them into a really big business, as you said, versus an index or versus an Advent or any of the others who say exactly the same thing, that they invest in people, they invest in big businesses? I
think the area that actually defines us is this venture partner group. So if you're a fintech business, you're coming to us and you say, okay, how are you going to add some value to us? There was a business we invested in which is in taking currently convertible bond trading and high yield bond trading onto an electronic marketplace. And they said they had a series of people chasing them. How can you add value to us? Well, actually, we got a business development director of Bloomberg who we can introduce to you. And we got one of the guys founding team of Betfair from a marketplace perspective. We would like you to meet them. That helps in our assessment and due diligence phase. It enables, and my acid question to them is, do you want to invest in this business? Because what you've said is you, as an angel investor, want to invest in these types of business. The answer is no, it's not one for us. If the answer is yes, absolutely, we want to be investing. And then how can you start to leverage their knowledge so you scale your business quicker?
So it's the network.
The network. And it's the network, the contacts that you then build out. And skills. I mean, I would argue skills and knowledge is as important, if not more important, than the financial capital.
I was interested to hear you, I think I heard you say that you collaborated with an angel group?
No, we have our own group, which numbers about 100 of individuals. They're all entrepreneurs, they're all business people who have been there and done it, and they get to co-invest alongside our funds.
Okay. As a director of an angel group, I was just wondering if there was a possible discussion on collaboration, but I can catch you another time.
So Alex, really interesting. A colleague of mine, my partner, came and visited your company this morning, so it'll be interesting when I speak to him with your translation bubbles there. But my question is we're looking at funding from both sides of the Atlantic, and I wonder, our gut feeling is that a US VC is less risk averse than a UK VC or a European VC, and I wonder if you agree with that, and if so, why?
I think it comes down to quantities of money. So would I put us in the risk category? Absolutely. We're an equity risk, we're taking equity risk. I think there are a whole series. I think actually the UK at the moment has got a vibrant startup scene. I think you've got a brilliant angel economy. And that's driven a lot by some of the EIS tax breaks, that sort of area. You've also got a vibrant corporate venturing scheme, and corporate ventures coming in. So, and also a whole series of incubators. So I think that's really good. As you move upstream, there's relatively few Series A investors who are prepared to put that risk capital. I think there are more coming in. And if I look at the VCs who are around today, most of them actually probably kicked off as we did in 2008, 2007, 2008. There's a few around. You look at the guys who are around in 2000, 2001, 2002, if they were successful, they've gone upstream. Think of 3i, think of Apax. And if they weren't, they haven't been able to raise any more funds and they've closed. So I think we're at the start of a new cycle. I think we'll always hear that the US is more prepared to take on risk. I think that is actually in their culture to a greater extent. I think the difference today is we have serial entrepreneurs who are prepared to do it once, twice, 3 times, so forth, which we didn't have 10 years ago in the same way. So I think it's changing.
What kind of consequences, good or bad, does somebody have if they raise a round on a Cedars or a Bank to the Future and have 2,000 equity shareholders? How do they get viewed by Octopus in terms of different classes of stock and things like that if they wanted to go on and raise VC afterwards?
Yeah, good question. It depends where you are, and in terms of Bank to the Future, I'm not sure. I get the impression it's more the peer-to-peer, so crowd lending type area. If it's crowd investing as well, the nightmare is a long list of shareholders. We see at various times when we're trying to make an investment, this whole great list of shareholders and a shareholders agreement saying that you need 100% consent to change it. I've had one business where we had 156 different shareholders and they eventually got every signature. So it's a problem when we're investing. Incidentally, for those around, nominee accounts are a great thing to do. The solicitors can do it. Set them up in nominees, then it's only one name on the register. The question is then who acts on behalf of that group. It's a big, big problem when you're selling the business. And it's at that point that we become particularly nervous. A lot of the purchasers now will not make a purchase unless they have full consent. And because they're worried about being sued for minority provisions. If you're in a nominee, actually, whoever's running that nominee, if it's set up correctly, they're the ones who actually end up, but you have your drag and tag rights. And it seems to be the purchasers don't give a monkeys about drag and tag, irrespective of what your lawyer says. They say, no, we're not doing it unless we get to 97%, if not 100%. We saw one business last year where they wanted 100%.
So what we've tried to do is set people up with a shareholders agreement that makes that process easier. And so we classify people into B shares with non-voting rights, and when they're minority. How do you classify those then? So if there was a load of shareholders, there was a few A shareholders with voting rights and a load of B shareholders with non-voting rights, is there issues there?
No, and then the question is, as long as those shareholders understand the impact, I think purchasers still have an issue with it scares them seeing a long list. So the immediate reaction when we sort of see a list and what are the rights associated with it is concerned. I think it's a good solution. I think there's no reason why that can't work. The question comes, though, is depending on what percentage that group have, do they want to say a say when it comes to the exit? You talked about your group of investors who have entered it saying, I don't want to sell for until 15 years' time. Well, actually, some of them might do. What can they then do about it? So those are questions you've got to ask. And who would buy them if they're non-voting shares? So those are the sort of things you just have to kind of think through. My question back to you is, on the crowd lending, do you take personal guarantees?
At the moment, our risk model is pretty conservative because we just launched it. Well, we're launching it next year, in fact. We're just putting together. But at the moment, we're doing unsecured loans, and we'll be looking at a new regulatory regime in order to do secured and personal guarantees and stuff.
So at the moment, you don't take personal guarantees?
There's more regulation involved in that.
I think there's something to know. Somebody like Funding Circle take personal guarantees.
Yeah.
And that's something that to bear in mind with peer-to-peer lending.